the Philippines was able to borrow billions of dollars from the world market at record low rates, sub 3% across 10, 25-year terms. Now, what do you think is that going to do when you start opening the economy up more and more and more? All that money, it's going to start finding its way into consumer spending and real estate. Every time the interest rates collapse, real estate will benefit. There's the other human factor to this that nobody can quantify, and that is the need to be back in community, in society. Humanity has never been locked up like this before. And the consequence during the time when we are able to go out will be hyper spending to make up for the lost time and the lost sanity that they incurred through this lockdown and through this crisis.
Okay, guys, we're in for a treat today. We are with one of the greatest minds in property consulting, not just in this era, but I really believe of all time. We have the president, the CEO of Leechiu Property Consultants, David Leechiu, back in the podcast. And everyone's excited to hear your thoughts, David. First of all, how are you? How's everything?
I am good so far. Thank you. You're too kind for that introduction, Marks.
First things first, where are we? Where's the property market? Just also so you know, majority of the people watching this, you have stock investors who have heavy positions on property stocks, and you have a lot of retail investors also who are investing or dabbling into residential properties or some small commercial spaces as well.
I think we're still in a very dark space because now parang people are so caught up with the rise in the volume of cases that they're becoming more and more and more paranoid and scared. Number two, many of the restaurants and retail owners, we projected that they would be having a hard time. And so now they're executing those plans of shedding retail stores or restaurant spaces. Number three, there are now a lot of buyers that have come out in the woodwork. They have stayed in cash for so long, waiting for a crisis to happen. And one, this COVID was unexpected, and now they're starting to deploy cash. We've seen a couple of properties in Forbes traded in the last few weeks, and these are 1 billion peso transactions. I mean, a house in Forbes, that's a 300 something thousand per square meter. There are a couple of houses in Dasman that are trading at 385, close to 400,000 per square meter. And these are not small transactions. These are not 600 square meter units. These are close to 2,000 square meter per lot. We're finalizing now the research of all the developers and how much they have actually sold in the residential space. Now that they offered promos, money started to flow out. I have to say na there's very little borrowing happening now. The banks are withholding cash despite the fact that interest rates on treasury bills are the lowest they have ever been for the Philippines in all of history. Despite the fact that banks are not lending, property prices in the villages are somewhat holding. They're discounted by a bit, but not by a lot. The condominium space on the upper end of the market, which is mga priced between 20 to 30 million, they're now being priced at close to 35-40% discounts. Again, not a lot. There's still a tug of war between the sellers and the buyers. I have to stress, very little, if any, financing. At least in our business, the pipeline of the deals we are hoping to close in between now and hopefully the end of the year is trading between 3 to 4.5, 5 billion, that range. While things are bad and the sentiment of fear is increasing, ironically, many of the business owners, for example, in the malls, those businesses are going from 0 to 10% at when they lifted the lockdown. And then now, they're touching somewhere close to 40% pre-COVID. While many brands are now shedding space, they are happy that the volume of transactions are coming up. The online companies that we are servicing are all expanding, both office space and warehousing. And these companies have not compromised on their rent payments on both office and warehousing. In the first few months of the lockdown, we prioritized the health of people. We tried to slow this thing down, the brink of economic collapse. When that threat became real, we now started to open the economy. So now I think we're gonna have to rebalance again. This constant rebalancing between the economy and the health of people. That's the difficulty that the government is in right now. As much as we want to simplify the situation, it's not easy. I really empathize with everyone in our leaders in government. Many of us might not like what they're doing or saying. The reality is that because everyone is learning on the fly,
Mm.
it's not going to be perfect. And I encourage everyone to try to understand how difficult it is for a small group of people to try to manage the economic and health situation of 110 million people. I was fortunate enough to have a small session with Secretary Berna Romulo, the head of tourism. She's very happy to see the domestic tourism numbers come up again. And that's going to feed the velocity of the economy back into the different provinces. We still have a long way to go, but I think things are a lot better economically than before.
If you have cash right now, your cash flow is uninterrupted, and then you see that you can make payments on property, would you advise people, if there's a good deal right now, to jump in it, or should they wait later on until all of this uncertainty is out of the picture?
I'm always a big propagator of saving money for
Mm.
a rainy day such as now. And
Mm.
this rainy day is going to last, you know, 40 days times 40 days times 40 days. You know? I mean, this is like a biblical ravaging. You have to have the resources to tide you over
Mhm.
and have a safe zone. And those who don't, well, I guess now is the time to learn the hard lessons that we needed to learn
Mhm.
and change the habit and thinking to force ourselves to invest in our minds, to keep clear thinking, and to start thinking longer term about investing in real estate. There are different schools of thought. The ones who can invest, the bet is, do you come in now? Is it too early? Is it too late? Only time will tell that. The five big pharma companies, between these five companies, they will produce 6 billion doses in the next 6, 9, 12 months. The most advanced will have tens of millions of doses by September, and that company is going to produce 2 billion doses
Wow.
on its own. So 7 billion world population, 6 billion doses within the next few months.
Mm.
That is going to be so powerful.
Mm.
Will they work or not? Well, only time will tell. But I'd like to think that the big pharma plus the regulators and all these companies, the global supply chain,
Mm.
are going to make it as safe as we can
Mm.
now. The euphoria that is going to translate to in the markets when they do roll out is going to be significant.
Mm.
And so you could be very smart and say, you know what, the sellers have come down 30%. That's not good enough for me. I want to go 50%, 60%, 80%. Well, maybe the phrase, it's very hard to time the bottom of the market
Mm.
or the top of the market, applies to the real estate sector also.
Mm.
Because ultimately, here is the fundamental thing. In the next 10 to 15 years, the per capita income of the Philippines will most likely double. Every global bank there is saying that the Philippines is in the top 20 countries that are going to be fastest growing in the world. We're right now in this downward spike trend. We all know that we're going to hit bottom sometime soon.
Mm.
And if you want to look long term, you just imagine what the Philippine situation is like. During the pandemic and the lockdown, Japan Rating Agency upgraded the Philippines.
Mm.
Number two, the Philippines was able to borrow billions of dollars from the world market at record low rates, sub 3% across 10, 25-year terms. Now, what do you think is that going to do when you start opening the economy up more and more and more? All that money, it's going to start finding its way into consumer spending and real estate. Every time the interest rates collapse, real estate will benefit. There's the other human factor to this that nobody can quantify, and that is the need to be back in community, in society. Humanity has never been locked up like this before. And the consequence during the time when we are able to go out will be hyper spending to make up for the lost time and the lost sanity that they incurred through this lockdown and through this crisis. That money will go down very quickly to the grassroots, to the very bottom. The combination of low, cheap money,
Mm.
okay, historically low, cheap money, a lot of investors looking at the Philippines right now, a lot of people want to spend when they can. There's a lot of pent up demand. So you just imagine the combination of all of that is going to allow a recovery faster than what many people think with
Mm.
the vaccine.
You're saying also that all of this, it's a black swan event. The economy isn't bad because businesses were bad. It's just really something that no one could control. That when the vaccine is out and consumer confidence goes back, we will all go back to normal.
We will go hyper normal. We will
Hyper
spend
normal.
like we were on steroids.
I'm sure, especially my wife is so excited when that will when that will happen. Fa-
Now I want to say two things to pre-qualify, okay?
mm,
First is that I am not blind to this economic havoc. In January and Feb, I was on the board with the entire Bancom. We were projecting our third record year this year. Never would we have thought that we would be so far from that number at this point. Leasing transactions, comparing it from 2019 to today, are down by 75%.
wow.
Okay?
Wow.
Now, it's not gone negative. You can look at the fact that it's gone down 75%, or you can look at the fact that there's still 25% transactions. And that is unique in the world. The Philippines is the only place in the world that has done that because of the BPO sector and the POGO sectors doing their share to keep the economy afloat. Other countries have contracted 20%. The growth rate didn't just fall,
Mm.
they went negative. Millions of jobs have been lost in the Philippines, but millions more could have been lost.
Mm.
And what I'm trying to plead everybody is to try to support the growth of the BPO and the POGO because they will then pull many people out of unemployment faster than any industry we can come up with in the next 6 months.
You've mentioned in a lot of your outlooks and forecasts, especially the POGO sector is one that has been driving rental rates in the Philippines. I want to know your take on the fact that there are some POGO companies that have been leaving, especially property companies, property stocks that have a lot of exposure in it.
So the BPO sector and the POGO sector were both allowed to operate during lockdown, during ECQ.
Mhm.
Specifically for the case of the POGO, provided they're able to fulfill certain conditions relating to what we call back taxes. The government side says, hey, you guys have not been paying enough taxes. Therefore, if you want to open, we will allow you to open during ECQ, but you have to settle this amount.
Mm.
On the flip side of that, the legal ones cut them out. The ones who are violating the laws cut them out. I'm just showing the two sides of the argument. They feel like the rules of the game got changed on them midway. If you're the POGO operator, you're kind of stuck in a really bad situation where you can't operate, you can't fly in people, and you can't send people back. It's a timing issue where we have to balance the need to get them to pay tax with the need to try to get them to operate so that they start doing their share in moving the economy again. Maybe 60%, 70% of them are foreign. But those foreigners are all spending in housing, in staffing. The 30 to 40% that are employed that are local are truly local. And they are some of the highest paid locals in the Philippines. They have a role to play at a time when their ability to do that piece in the equation will mean a lot to us. When there's hardly any economic activity, if we want to stimulate the economy, then let's allow them to operate and do so and compromise on the taxes. And I'm happy to say the two sides, the government and the POGO sector, have been compromising. What's the point if they all leave today? And I can tell you so many countries are so envious to see the size of the POGO market here and they want that to happen in their country.
I wanted to ask, how does that impact also the rental space for those property development houses that are exposed to it? Do we see demand to stay where they are, or do we see it based on this go a bit lower, or will the BPO sector take up some of the space that should have been also for POGO so that we see the supply and demand to be at relatively healthy levels still?
With the new tax regime applied to the POGO, it is significantly more expensive to operate here in the Philippines. We might see a chunk of them leave. We have been seeing some of them leave, but the ones that have actually left, the space they occupy is not significant. The POGO sector occupies 1.7 million square meters of office space.
Mm.
Based on our most recent count, building to building, floor by floor, the amount of vacancies produced in these buildings has not amounted to even anywhere close to 5% of that number.
Mm.
Today, it's too early to say how much of them will actually pack up and go. But
Mm.
again, I am comforted by the fact that the existing POGOs here, at least the big ones, the big operators that comprise 70-80% of the industry, are all ramping up now. If they empty out all this office space, which I don't think they will do, but if they do it now at a time when economic conditions globally are so bad, then of course we're going to get hit because they don't just occupy 1.7 million square meters of office space. They also occupy 2 million square meters of residential space. Okay, you can just imagine all the income tax that we will lose from all the office and residential landlords. So it really depends, and it's too turbulent right now to have any clarity on the rate of their exodus if they ever do. Right now, they are going from 0 to 30%,
Mm.
and they're trying to go to 50% with compromises with the government.
You have been a very, very strong proponent of a lot of the infrastructure spending that the government has been doing and is doing and will continue to do. Based on what's happening right now, do we sense some optimism still there that if more infrastructure projects get done and get finished over the next 2 years, it can somehow still pump and prime the economy and help all of those areas where access to infra has been relatively hard for years?
Yes, yes, definitely. The economic productivity will be significant for Filipinos, right? For example, the average worker spends 6 hours minimum traveling back and forth from home to work, right? 6 hours is a lifetime. It's like half their life, basically. For example, with me in particular, I'm able to work from home productively. How productively? My God, my meetings were nonstop. And why was I able to cram all those meetings? Because I just sat on my chair for 15 hours. The case for many executives have been the same, that they've been able to cram so many meetings simply because they didn't have to travel. And the same will be for everybody. Productivity will definitely improve and increase, and that will help us recover faster with the economy. And you want to get really excited? You want to get really excited? Just go YouTube MRT7 construction video.
Mm-hmm.
There's a drone that films the thing tip to tip. Oh my God, I was so excited. Because that's one of the longest trains we have from
Mm-hmm.
Nova Liches all the way to North EDSA. It's going to benefit so many people. And the impact of the property market in Fairview, that we used to call Farview, will not be so far anymore. And that's not a dream. It will get completed, well, hopefully in the next 18 months, because they haven't quantified the impact of time on people's lives.
Mm.
And as we all have learned in this crisis, life is really much shorter than we think. And time is truly the most important commodity. We can't imagine the number of clients that we are servicing now who want to buy a second vacation home, a third vacation home. And these are people in their 80s. Ah.
I want to ask three things that are connected to the coronavirus. You said that a lot of people are working from home and it's very efficient. How does that impact property prices given that there will be more people just staying at their houses? And also from what you said at the start that there are a lot of retail shops also going into the e-commerce space. Will that also have an impact on mall rentals as well? And third, like what you said, that there's more people wanting to have a vacation house. I've been seeing a trend, not just also for old people, but more people that have said, kaya pala na nakatira ako malayo sa city because of the internet. I'll probably just get a house away from Metro Manila and then just have good connectivity. Will there be a trend of more people buying landed spaces outside the metro?
Definitely workforce, Philippines, I think 30-40 million. I don't have the exact number off the top of my head, but 70% of that work from home is just not sustainable. If they were given a choice, they will rather work outside of home because of too many distractions. And the employers Right now we're conflicted because wow, for the first time, they're spending so much time at home. But let's face it, everyone's productivity levels have gone significantly down. And the second thing that we sacrifice in not being together in the workplace is the collaboration, the intimate levels of collaboration and ideas exchange and feedback that you just can't get from this setup.
Mm.
Again, to quote Jack Ma, today is hard, tomorrow's going to be worse. And right now, I think we're in that place. Tomorrow is now.
Mm.
But the day after tomorrow will be sunshine because I think the big pharma companies will figure things out as they already are. And it's just a matter of a few months before a significant chunk of the population globally will have access to these vaccines. Now, some people said, oh, this vaccine needs testing. I don't know the side effects. I don't know this. I don't know that. Well, frankly, maybe 1 to 2% of the population can say that. The rest of humanity will probably not have a choice.
Mm.
And they'd rather take the hit now and worry about tomorrow.
How about for e-commerce? How does that impact the retail?
There's been a lot of movement in retail. So a few companies in the food business have now benefited from it. But remember that before, there were very few food providers. Now, everyone and their mother and uncle is providing food.
This slowdown, people are projecting also that our GDP won't be as good. We will also be slower. How far do you think this will drag on? Do you think if the vaccine comes out in 6 months or a year, suddenly right after that, things would go back to normal already?
I think certain segments will go hyper normal. That just means that the trickle down effect will be much faster.
Should people be more cautious, especially for those that have property stocks that are greatly diverse? Like you talk about Ayala Land, Robinson's Land, Vista Land, Mega World. That they're not just in commercial spaces. They're also in BPO centers. They're also into malls and residential developments. Is this the time that thinking that there will be hyper spending after? Is it a good time also to buy when it's lower and then think about that a recovery will happen? Or
Yeah.
since this is something that's new, wait a bit first?
If I had more resources, I would put them all in the stock market.
Wow.
And from what I've seen, this has been the cycle of investment in people. They make a lot of money in the stock market, buying in low, and then wait a little bit, few quarters, a couple of years, they sell, and the profits that they make, they invest in property, which is why there's always this lag of a few months between the uptick in the stock market and the uptick in the property market.
A lot of people are anxious, a lot of people are scared, a lot of people don't know what's going to happen, especially for people that somehow their income got disrupted, their businesses got hit. Any words of advice for them?
During these hard times, I've reread this book, Man's Search for Meaning by Viktor Frankl.
Mm.
This is a guy who survived the Holocaust. He got thrown into the concentration camps and he observed the one thing common with the people who survived the Holocaust, the fact that they constantly reminded themselves of something to live for. That is trying to keep the fighting spirit alive.
Mm.
And I'm not just saying this from a theoretical perspective. I mean, my parents lost everything in the crisis in the early 80s. Everything. We had so much debt that we couldn't pay. Interest rates were at 40%. It choked the entire economy, millions of businesses and people. The one thing that I have seen in people in the 26 years now that I'm doing this is the fighting spirit of people, right? And we have to try to keep that alive. Number two, that doesn't mean that we have to be blind to the realities of things. As manically optimistic you think I am today, I am, assure you, I'm not blind to the crazy disruption of wealth, the domestic violence that happens as a consequence of that, the depression that goes through that, which is why I support the Natalie Goldburn Foundation, which is the mental health institution here, right? We have a lot to thank to Jean and her family because she has really helped so many people through this crisis. But we have to keep the fighting spirit alive. We have to be real with what is going on around us, and we have to make that effort to reflect what is real from what is delusion. The illusions are sometimes bad, the illusions are sometimes good. We have to go back to basics, which is we have to save money for precisely these times, which everyone forgot because people kept talking about cash is trash, etc. We have to use this quiet time to disengage from things that eat our mind, and we have to pour it into things that are nurturing our mind. So, specifically, please, I know, but there's only so much K drama a human person can consume. So please unplug from K drama, social media, IG stories, etc., 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 etc. And please focus to nurture your mind into learning about how to invest in the stock market, in the property market, what makes the economy ticks, what are the trends that are happening inside and outside the Philippines. And that kind of education will merit us for a lifetime.
Thank you so much, Mr. David Leechiu, Leechiu Property Consultants. If you want to know more about them, I'll put the link of their company in the description below so you guys can check them out as well. So thank you so much for your not just real estate expertise, no, but I think these are principles that people can also use in life. So thank you so much. If you are enjoying David Leechiu, put it in the comment section. I'm learning. I want David Leechiu, and thank you so much, David, for joining us. And to everyone, I hope this video helps you trade well, trade strong, trade smart. See you all again soon. Bye, everyone.